The evening star pattern is a crucial concept in trading that signals a potential reversal from an upward trend to a downward trend. This pattern typically emerges at the peak of an uptrend, consisting of three key candlesticks. The first is a large bullish candlestick indicative of the ongoing uptrend. It is followed by a smaller bodied candle or a doji, which opens higher than the previous close, signaling hesitation among traders. The third candle is a large bearish candle that opens lower than the second and closes well into the body of the first candle, confirming the reversal. The significance of the evening star pattern lies in its ability to alert traders to a potential shift in market sentiment from bullish to bearish. Identifying this pattern early can help traders make strategic decisions, such as exiting long positions or considering short positions to capitalize on the forthcoming downtrend. Traders are encouraged to practice spotting the evening star pattern and interpreting its implications in their trading activities. This involves studying historical charts to recognize the formation of this pattern and observing how it often precedes a decline in prices. By incorporating this pattern into technical analysis, traders can enhance their ability to make informed decisions based on anticipated market movements. In conclusion, the dynamic nature of trading markets underscores the importance of continuous learning and adaptability. Mastering the identification and interpretation of patterns like the evening star is part of developing a nuanced understanding of market behavior. Traders who commit to honing their technical analysis skills and staying abreast of market trends will be better equipped to navigate the complexities of trading and potentially secure more favorable outcomes. Candlestick patterns are a crucial aspect of technical analysis in the financial markets. They are used to understand market movements and investor sentiment by visually representing price movements within a specific time frame. Each candlestick consists of a body and wicks. The body represents the opening and closing prices, while the wicks show the high and low prices during the candle's period. Traders analyze these patterns to make predictions about future market behavior. One notable pattern is the three white soldiers. This pattern is seen as a strong indicator of a forthcoming bullish trend. It consists of three consecutive long-bodied candlesticks that open within the previous candle's body and close higher than the previous candle. Each of these candlesticks should have small or no wicks, indicating that prices closed near the highs of the day. This pattern typically emerges after a downtrend, suggesting a reversal and the beginning of a bullish phase. The appearance of the three white soldiers is significant as it demonstrates a sustained period of buying pressure, where buyers consistently dominate the market. Traders view this pattern as a reliable signal of changing dynamics in the market, potentially indicating the start of a strong upward movement or rally. As with all candlestick patterns, it is advisable to consider the broader market context and other indicators to make informed trading decisions. The three white soldiers pattern is a bullish indicator found in a candlestick chart, which is very popular in technical analysis for predicting a change in market trend. This pattern is characterized by three consecutive long-bodied candlesticks that have closed higher than the previous day, with each session opening within the body of the candle from the day before. These three candles signify a strong and consistent rise in the stock's price, suggesting that the bearish market trend might be turning bullish. To visualize the three white soldiers without actual chart images, picture three tall pillars standing side by side, each taller than the last, signifying strength and upward momentum. The first candlestick opens near the close of the previous session. As trading continues, it closes significantly higher, indicating the beginning of buyers taking control. The next two candles follow a similar pattern, opening within the body of the candle before it and closing at an even higher point. This shows continued buying pressure and a strong bullish sentiment among investors. In various market scenarios, the appearance of the three white soldiers can be a powerful signal. For instance, after a prolonged period of downtrend or at a low price range, this pattern can indicate a robust reversal signal, suggesting that the market sentiment is shifting from bearish to bullish. Similarly, in a sideways or consolidating market, the emergence of the three white soldiers might hint at the start of a new uptrend, providing an opportunity for investors to enter the market with a potentially positive outlook. Foremost, it is important to note that while the three white soldiers pattern indicates a strong bullish move, traders and investors are advised to consider additional analysis, including volume data and broader market trends, to confirm the strength and sustainability of the reversal before making investment decisions. The three white soldiers pattern is a bullish candlestick formation that signals a strong shift in market sentiment. To identify this pattern, we look for three specific characteristics related to the shape, size, color, and sequence of the candles. Firstly, the shape of each candle in the three white soldiers pattern is important. These candles are long and lack significant shadows, indicating a strong buying pressure throughout the trading session. The opening of each candle should be within or slightly above the previous candle's body, showing continuity in buying interest. Secondly, the size of the candles matters. Each of the three candles should be relatively large, suggesting that there is considerable interest in pushing the price upward. A noticeable increase in size from the first to the third candle may further confirm the bullish sentiment. Thirdly, the color of these candles is white or green, depending on the charting software. This color indicates that the close price is above the open price for each candle, which is a bullish sign. Finally, the sequence involves three consecutive candles fitting the criteria mentioned above, with each session opening within the body of the preceding candle and closing higher, suggesting sustained buying pressure. The position of the pattern within a trend is crucial for accurate interpretation. Ideally, the three white soldiers should appear after a downtrend or a period of consolidation, signaling a potential reversal and the beginning of an uptrend. The pattern is considered more reliable when it follows a clear downtrend, as it indicates a significant shift in market momentum. When utilizing chart examples to showcase the three white soldiers pattern, it is essential to identify charts where the pattern appears at the end of a downtrend. This real-life application helps in understanding how the pattern signals the transition to bullish market conditions under different market environments. The visual representation of the three white soldiers in these charts confirms its characteristic features and helps in recognizing similar patterns in future trading scenarios. The three white soldiers pattern is a powerful indicator that reflects a strong shift in market sentiment from bearish to bullish. This pattern is characterized by three consecutive long-bodied candlesticks that open within the body of the previous candle and close higher, suggesting a steady rise in buying pressure. Each of these candles opens higher than the close of the previous day, indicating the persistence of buying interest and the absence of significant selling pressure. The appearance of the three white soldiers pattern after a downtrend represents a reversal and suggests that the market sentiment has significantly shifted towards optimism. Traders and investors interpret this pattern as a sign that the bearish trend is losing momentum and a bullish trend is taking hold. The psychology behind the pattern is key to understanding its impact. The first white candle signals a change in market dynamics where buyers begin to outweigh sellers. The subsequent candles strengthen this perception, demonstrating sustained buying interest that overwhelms the previously dominant selling pressure. This consistent upward movement over 3 sessions builds confidence among traders and investors, encouraging more participation in the buying trend and further fueling the bullish momentum. In essence, the three white soldiers pattern indicates a strong and swift shift in momentum, often signaling the beginning of a strengthening bullish trend. It is a visual representation of a change in trader psychology, from pessimism to optimism, backed by increasing buying interest and declining selling pressure. Recognizing this pattern can be valuable for market participants looking for signs of a market turnaround or confirmation of a new bullish phase. The three white soldiers pattern is a candlestick chart pattern used in technical analysis to signal a potential reversal in a downtrend or to confirm the continuation of an uptrend. This pattern is characterized by 3 consecutive long-bodied candlesticks that open within the previous candle's body and close at a higher level than the previous one, suggesting a strong bullish move. When the three white soldiers pattern appears after a downtrend, it is considered as an indicator of a potential reversal. The pattern suggests that the buying pressure is overtaking the selling pressure, which could lead to a reversal in the market's direction from bearish to bullish. This shift in market sentiment can provide traders with an opportunity to enter the market early in the beginning of a new uptrend. On the other hand, if the three white soldiers pattern emerges during an uptrend, it acts as a confirmation of the trend's continuation. It indicates that the buyers are still in control and the upward momentum is likely to continue, reinforcing the strength of the ongoing bullish trend. To visualize how the three white soldiers pattern can lead to various market outcomes, imagine a chart where a downtrend has been in place, marked by declining candlesticks. Suddenly, 3 long-bodied bullish candlesticks appear, each closing higher than the one before, forming the three white soldiers. This visual shift signifies a change in market sentiment, potentially marking the end of the downtrend and the start of a new uptrend. Alternatively, in an uptrend scenario, the appearance of the three white soldiers amidst a series of rising candlesticks serves as a robust affirmation that the uptrend is strong and likely to persist. The pattern's presence in this context would reaffirm traders' confidence in maintaining or even increasing their long positions. The key takeaway is the importance of context when interpreting the three white soldiers pattern. While it can signal a bullish reversal following a downtrend, its significance is enhanced when confirmed by other indicators or when appearing in specific market conditions. Thus, its predictive value is not absolute, but rather depends on the larger market picture and accompanying analysis. The three white soldiers is a candlestick pattern that signals a strong upward movement in the market. To validate the implications of this pattern, several additional indicators or conditions should be considered, including trading volume, nearby support levels, and the trend preceding the pattern. Let's explore how these factors can reinforce or weaken the significance of the three white soldiers pattern. First, trading volume plays a crucial role in confirming the pattern. An increasing trading volume during the formation of the three white soldiers indicates strong buyer interest and can reinforce the bullish signal. This growing volume suggests that the upward trend is likely to continue as more participants enter the market on the buy side. Second, nearby support levels need to be taken into account. If the pattern forms near a strong level of support, it can add to the bullish sentiment. Support levels are prices at which a significant amount of buying interest is anticipated, preventing the price from falling further. The proximity to such levels can offer additional confidence in the pattern's predictive power, indicating that the market may have found a solid footing for the upward trend. Third, the trend preceding the pattern is essential for context. The three white soldiers pattern is most significant after a downtrend or a period of consolidation. It signals a potential reversal of the trend, marking the beginning of a bullish phase. However, if this pattern appears after a prolonged uptrend, it might not be as reliable, as it could indicate an overextended market that is due for a correction. In summary, while the three white soldiers pattern is a strong indicator of a bullish move on its own, its significance is reinforced when accompanied by increasing trading volume, formation near support levels, and a preceding downtrend. Conversely, these conditions can weaken the pattern's implication if they do not align, such as in scenarios of low trading volume or if the pattern forms after a long bullish phase. Therefore, it is crucial to consider these factors collectively for a more robust analysis. The three white soldiers pattern is a candlestick formation that signals a strong bullish move in the market, typically indicating a shift from a downtrend to an uptrend. Historically, this pattern has shown a notable degree of accuracy in forecasting market direction changes. When this pattern emerges, it consists of three consecutive long-bodied candlesticks that close higher than the previous day, with each session opening within the body of the previous day. This consecutive pattern of closing higher signals strong buying pressure and a potential reversal of the market's direction. However, like any technical analysis tool, the three white soldiers pattern has its limitations. Its reliability can be affected by market conditions and the context in which it appears. For instance, the pattern's effectiveness might be diminished during periods of low trading volume or when it forms within a range-bound market. Therefore, it is crucial to use the three white soldiers pattern alongside other analytical tools and indicators, such as volume analysis, moving averages, or momentum oscillators, to confirm the signal's strength and the potential for a sustained bullish trend. In summary, while the three white soldiers pattern can indicate a strong bullish move and a change in market direction, investors should approach it with caution and use it as part of a broader set of analytical tools. This holistic approach allows for better judgment and decision making by considering multiple factors and indicators, thereby enhancing the strategy's overall effectiveness and reducing the risk of reliance on a single pattern. Integrating the three white soldiers pattern with other technical analysis tools can significantly enhance trading decision making by providing a more comprehensive view of market conditions and potential trends. The three white soldiers pattern, which signifies a strong bullish move, can be an indicator of an impending trend reversal or a confirmation of ongoing bullish momentum. By combining this pattern with additional technical tools, traders can validate their analysis and refine their trading strategies. Firstly, combining the three white soldiers pattern with the relative strength index, or RSI, can help traders assess whether a stock is overbought or oversold. For instance, if the three white soldiers pattern emerges while the RSI is above 70, this could indicate an overbought condition and a potential for reversal. Conversely, if the RSI is below 30 and the three white soldiers pattern appears, it may signal a strong bullish reversal from an oversold state. Secondly, the moving average convergence divergence, or MACD, is another tool that can be paired with the three white soldiers pattern. The MACD consists of two moving averages that help identify trend, direction, and momentum. A bullish crossover in the MACD, occurring around the same time as the three white soldiers pattern, can reinforce the likelihood of a sustained bullish trend. Lastly, Fibonacci retracements can provide key levels of support and resistance. When a three white soldiers pattern forms near a Fibonacci retracement level, it can offer additional confirmation that the price might bounce off this level and continue its upward trajectory. An example of how this integration can enhance trading decision making involves the observation of a three white soldiers pattern after a significant downtrend. If during this period the RSI signals that the asset is entering an oversold territory and the MACD shows a bullish crossover, a trader might take this confluence as a strong buy signal. If this bullish signal aligns with a significant Fibonacci support level, it adds further confirmation to the trade decision. This integrated approach allows traders to utilize a multi-layered analysis strategy, giving them a more reliable assessment of the market and helping to minimize risks associated with trading based on single indicators. It's a testament to the power of combining various technical analysis tools to navigate the complexity of the markets with greater confidence and precision. Common errors and misconceptions about the three white soldiers pattern could lead traders to make inaccurate market predictions or miss significant shifts. The three white soldiers, a sign of a strong bullish move, consists of three consecutive long-bodied candlesticks that open and close higher than the previous day, with each session's open occurring within the body of the previous candlestick. It is crucial to recognize that this pattern signals a reversal from a downtrend to an uptrend. However, errors arise when traders 1. Misinterpret the presence of three rising candles as a definite three white soldiers pattern without considering other criteria such as the quality of the trend reversal, the size of the candle bodies, and the trading volume. 2. Overlook the context in which the pattern appears, not considering preceding trends. A genuine three white soldiers pattern emerges after a period of bearish trends. 3. Over-rely on this pattern without combining it with other indicators for confirmation due to its potential to indicate a temporary rally or a pullback rather than a prolonged uptrend. To improve pattern recognition and analytical skills, consider the following tips. First, look for confirmation from other technical indicators like moving averages or momentum oscillators to reinforce the signal provided by the three white soldiers pattern. Second, study past market conditions where this pattern appeared to gain insights into how often and under what circumstances it leads to sustained bullish trends. Third, assess the volume supporting the three white soldiers pattern. Increasing volume can indicate stronger buyer commitment and a higher likelihood of a trend reversal. Fourth, practice patience and wait for the pattern to fully form before making trading decisions. Prematurely acting on what appears to be forming patterns can lead to misinterpretation. Lastly, always consider the broader market context. No pattern operates in isolation, and macroeconomic indicators, market sentiment, and news events can dramatically influence trade outcomes. The three white soldiers pattern is a bullish candlestick formation that can signal a reversal of a downtrend. Here, I will discuss strategies for using this pattern to set entry and exit points for trades and share stories where traders effectively utilized this pattern in their trading strategies. To use the three white soldiers pattern for setting entry points, traders typically wait for the pattern to be fully formed. This means observing three consecutive long-bodied candlesticks that close higher than the previous day, with each session opening within the body of the preceding candle. Entry points are often set after the third candle closes, as this confirms the pattern and indicates a strong buying sentiment. However, traders also pay attention to the volume accompanying the formation. Ideally, increasing volume should support the pattern, which adds to its reliability. For exit points, traders might look for signs of a weakening trend, such as shorter candlesticks or a bearish reversal pattern, suggesting that the bullish momentum is slowing down. Some may set a target based on resistance levels or use a trailing stop loss to lock in profits as the price moves higher. One effective use of the three white soldiers pattern can be seen in a case where a trader identified this pattern at the end of a prolonged downtrend in a tech stock. The stock had been declining for weeks due to a market sell-off. Upon spotting the three white soldiers pattern, the trader entered a long position at the close of the third candlestick, betting on a reversal. To manage risk, they set a stop loss just below the low of the first soldier. Over the following days, the stock rallied, benefiting from renewed investor interest in tech, and the trader exited the position near a key resistance level, securing a significant profit. In another instance, a currency trader used the three white soldiers pattern to time their entry into a forex pair. The pattern emerged following a dovish statement from a central bank, which weakened the currency and set the stage for a reversal. Seeing the pattern form on the daily chart with increasing trading volume provided the trader with the confidence to enter a long position. They managed their trade by setting a stop loss below the starting point of the pattern and targeted a price level that had served as a strong resistance in the past. As anticipated, the currency pair rose, reaching the targeted resistance, and the trader exited, capturing the gains. These stories illustrate how traders can effectively utilize the three white soldiers pattern to guide their trading decisions. By carefully analyzing the pattern and corroborating it with other indicators like volume and resistance levels, traders can enhance their strategies for setting entry and exit points. The three white soldiers pattern is a bullish candlestick formation that signifies the end of a downtrend and the beginning of an upward movement. This pattern consists of three consecutive long-bodied candlesticks that close higher than the previous day, each opening within the body of the candle before it. However, there are variations of this pattern and similar ones that traders should be aware of, as they also provide valuable market insights. One variation is known as the modified three white soldiers. This formation may not feature three consecutive long bodies, but maintains a steady upward trend over 3 sessions. They signal a stronger commitment to a new upward trend compared to the classic three white soldiers because the market does not open significantly higher than it closes, suggesting a more measured and sustainable rise. Another similar pattern is the three advancing white soldiers. This pattern is similar to the three white soldiers, but includes a criteria that each candle must close near the high of the day. It indicates a very bullish market sentiment, as buyers are willing to buy at the highs and push the price up throughout the session. On the other hand, the three black crows form a stark contrast to the three white soldiers. This pattern consists of three long, consecutive black candlesticks, each closing lower than the previous day, ideally appearing after a significant uptrend. It signals a strong reversal into a downtrend as sellers take control of the market prices from the buyers. Understanding these variations and their implications is essential for traders. Each pattern not only helps in signaling potential market movements, but also in setting strategic entry and exit points. For instance, the appearance of a modified three white soldiers might suggest a good entry point for a long position, with the expectation of a steady climb, whereas spotting three black crows could warn of an upcoming sell-off, prompting a trader to close or short positions. Since these patterns reflect underlying market psychology and sentiment, incorporating them into technical analysis allows traders to make more informed decisions. Being able to visualize and comprehend these patterns without chart examples can prove invaluable, enhancing the ability to anticipate market movements based on candlestick formations.